which is not a basic tax planning strategy? Now, it's a great question because most people, what they think is planning is absolutely not planning. So let's talk about what is true planning and how could it affect you. And it could be prescriptive, by the way. So many of you overpay tax and you don't have to, but you're either trying to figure it out on your own. TurboTax is never going to do it for you. H&R Block's never going to do it for you. So you got to lean in and get some expertise. Number two, what proper tax planning looks like in the context of a wealth building plan. And number three, why the wealthy actually plan for the taxes before they even earn the money. So they actually know where the money's going to go and there's a direction to it. Filing taxes, right? Just putting your return in is not tax planning. Get a refund is not tax planning. That's just guessing and loving that you actually are going to give the government money throughout the whole year. And then the reason you're getting money back, and see, even if it's $5,000, you got no interest on that money, where you could be making money on your money at all times. You want to pay tax last, not first and not up front. So through better entity structures, true tax planning, which is sitting with somebody that's an expert quarterly, minimum of quarterly. And if you don't make a ton of money, then you might want to do it at least twice a year. But as you're making the money throughout the year, you actually have a plan of what you're going to do with it, how much you're going to hold back in cash, because you may have to go buy some assets. So the question I always have in the Q3 and Q4 of a year with our clients is, are you going to overpay tax again, or are you going to keep some money to actually buy more real estate? So you have huge depreciation schedules. You could buy some gas and oil. You may, depending on your tax strategist, may have you buy a new vehicle for your company if you haven't done that in a while. You may put money into one of your 401ks. So there's a variety of things that you can do to really affect your plan, but you got to be sitting with somebody on a quarterly basis. And like I said earlier, the wealthy plan before the money's made. So knowing that you're going to make, say, $300, $400, $1 million this year, what's the plan to pay the least in taxes? With that, what's the corporate structure? Another thing that is not a tax strategy is waiting till March, scrambling to find a CPA or running over to, I think Walmart even has little tax, preparers. You can go to H&R Block. This is not a scramble. That is not a plan. That is just a reaction. And it's really giving all your information to somebody for them to just document, like a historian of what you did. There's nothing you can do once your books close on 12/31 at midnight, the year of that taxable year. And if you miss a year, like I have clients right now coming in, they say, well, I haven't filed in 3 or 4 years. There will be fees, there will be penalties. Some of those can be reduced. Majority can't, and you're just going to have to do it. So file your taxes every year on time. But in corporate structure, all you need is one LLC to be able to extend it all till September. So you close books on 12/31, plan the whole year, keep your money making money, and then at the last minute, September 15th is when you have to file for the year prior. And then in October, you pay and you file your taxes. So we do the best strategy to keep both of those as low as possible, and it's strategically done throughout the year. So right now we're filming this at the end of June in 2026. You're really getting to a finish line. Like you have maybe 5 months to save 2026, meaning if you're not corporately structured, if you haven't been paying your bills out of company deductions versus just paying it out of your personal bank account, if you've been commingled, there's a lot of things right now that we have to help you fix your foundation so you can actually predict where you're coming in on your tax strategy. So what does tax planning with the wealthy really look like? Well, it looks like starting again before you make any money, before you even start the company, you're actually looking at the tax structure of what is the company you're going to start. Typical investments go into LLCs, active businesses, operating companies go into S corporations. Once you are on track to make more than $250, you want to consider a C corporation, depending on how you're making the money and how you are spending the money. You want to take as many as your personal expenses and move them into legal business deductions right away, so you can actually start calculating what is the tax going to be on that year. It's amazing how many business owners don't take advantage of the 81 to 83,000 pages of tax code, the amount of deductions you can have. And to activate all of those deductions, it's not with one simple LLC or one simple S Corp. You're going to have a variety of LLCs, a variety, maybe at least one, if not two S, and a C Corp. And the C Corporation has a different tax year end. So it's not filing on 12/31, which is that offset year, which gives us the magical formula in management and marketing contracts to offset and push some of that money into the next year. And some people, you'll hear this say, well, that's just kicking the can down the road. Eventually, you're going to have to pay it all. Depends how you invest. So that's a big, big piece I'm going to talk about next. While you're here, I want you to subscribe to the channel, click the notification button, be here 5 days a week. This channel is very, very effective on tax strategy, tax planning, wealth building, legacy planning, any of the topics that you want. If I don't have them here, check my playlist first. Otherwise, put them in the comments section and we will make sure we'll put in the content for you. Also, make sure when you're looking at the show notes, you download my Millionaire Maker book and read up to chapter 3, do a gap analysis. And once you've done the gap, send it in. One of our team members talk to you, have a one-on-one conversation, and see where we can find and start closing those gaps so you don't ever overpaying taxes. It's prescriptive when you do it right. So why the wealthy plan way before they earn, again, is we want to make sure we're maximizing as many personal expenses into business deductions. You need to have a big enough corporate structure. Most people who are millionaires have at least one LLC, one S Corp, and one C Corp. And then as you move into multi-millions, that corporate structure expands. So some of you say, well, I just want a simple life. I don't want to have to deal with all that paperwork. Then you're going to overpay taxes. I always say you do paperwork or be poor. So I actually used to sell t-shirts that had that on them because a lot of you think that tax planning is just filing the return. That's a preparation and a filing of the return period. That has nothing to do with planning, nothing to do with strategy. So wealthy people meet at least quarterly. The more money you have and the more potential tax you're going to have to pay, then you move that to monthly. There are times where I was meeting with my tax strategist on a weekly basis. So that's sitting and saying how much you're projecting you're going to make, making sure you stay on track for that, get the corporate structures, make sure you have the deductions. And then again, Q3 and 4, you're starting to invest differently. So it's a very active engagement. It's not just passive. You go to work, you come home, you go to work, come home. Because even if you go to work and out of your paycheck, you're going to have your pay tax right out of your paycheck, and then you get what's left. When you have an operating company, a legal reason to make money, and you have it in a company, in addition to your job, that now can activate the deductions that you're going to need to do the things that I'm talking about. So we don't ever pay anything that can be a deduction out of our personal bank account. It's very strategically done. It's very thoughtful, mindful. It doesn't take a lot more work. And some people will say, and if you're one of them, don't say, well, I don't have time for this. You're already spending the money. You're just doing it wrong. So stop. If you have any questions, go to askloral.com, ASKLORAL. Ask a question, make a request. We'll be back tomorrow.